My name is Rory King, and I'm a second-year finance student at Georgia Tech from Decatur, Georgia. My stocks are JB Hunt, Qualcomm, and SAP. Outside of this research, I'm involved as the treasurer of Finance Society, and I'm a member of GT Boxing, and I have passed the CFA L1 exam. I enjoy watching TV, playing pickleball, and the Atlanta Falcons. Alright, let's talk about SAP. SAP SE, established in 1972 and headquartered in Waldorf, Germany, is a leading multinational software corporation specializing in enterprise applications and business AI. The company offers a comprehensive suite of products, including SAP S4 HANA for finance and supply chain management, SAP SuccessFactors for human resources, and various cloud-based solutions. With a global presence spanning over 180 countries and a workforce exceeding 100,000 employees, SAP serves a diverse clientele, from small businesses to large enterprises. In recent years, SAP has focused on cloud computing and artificial intelligence, aiming to enhance business operations and customer experiences. SAP's biggest segments are cloud computing and software. Most of SAP's cloud computing revenue comes from enterprise resource planning, which is a B2B service that integrates a company's core functions into a single centralized system. Alright, let's talk about earnings from Q3 2025. Q3 2025 earnings were positive and in line with management expectations for the quarter. Revenues for Q3 25 were 9 billion euros, a 7% increase from the 8.5 billion euros in Q3 24. IFRS operating income was roughly 2.5 billion euros, a 12% increase from Q3 24 as well. EPS for Q3 were €1.71 per share, a 38% increase from 2024. SAP Cloud revenue increased 22% to 5.2 billion euros for the quarter and currently has a cloud backlog of around 19 billion euros, which is a 23% increase from 2024. SAP also performed 1.5 billion euros of share repurchases this quarter. It's worth noting that the software licensing revenues, however, decreased 42% from Q3 24 to Q3 25. From the conference call and earnings presentations, we learned about numerous developments. In Q3, SAP NS2 was awarded a major framework contract with the U.S. government. In addition, Alphabet, Ericsson, Lufthansa, Steel, and Tapestry have all adopted SAP solutions through WISE systems, or as management says it, they have opted for the WISE journey. SAP is also now working with AWS to launch software in India and Europe, and they have announced an open AI partnership to provide the German public sector with one of the world's leading LLMs. Management was also pleased that business in the U.S. public sector is beginning to pick up. SAP will be introducing AI assistance in June of 2026, which is something to look out for, and management expects SAP to benefit even further from AI adoption increasing over the next few years. It also bears mentioning that operating income in Q3 was impacted by approximately 100 million euros because of a change in case law that affected SAP's other tax litigation provisions, as well as more than 100 million euros related to the workforce transformation. Management expects operating income to be impacted by another 100 million euros because of this change in Q4 as well of 2025. Overall, management expectations for Q4 2025 are that revenue will be on the lower end of predictions and that operating income will be on the upper end. Now, let's take a look at the model. SAP has around 8.5 billion euros of cash with around $5.2 billion euros of long-term debt and around 3.6 billion euros of short-term debt. Long-term debt has decreased slightly and short-term debt has stayed roughly the same since 2024, but the relatively high level of liquidity provided by the potent 8.5 billion euros of cash reserves, as well as the 1.5 billion euros in share repurchases in Q3, can give investors confidence in the liquidity and solvency of SAP for the time being and for the foreseeable future. Revenue has had a positive trend. Let's look at revenue. Revenue has had a positive trend since 2021, going from around 28 billion euros in 2021 to around 34 billion euros in 2024, and an expected 38 billion euros in 2025. I'm expecting 12% revenue growth, I'm expecting 12% revenue growth in 2025, which is in line with management expectations of low double-digit growth, and I expect this to continue in 2026 and beyond as the development of AI brings SAP more business and the cloud backlog is utilized. These factors are somewhat offset by the decrease in software licensing revenue, which is why I expect revenue growth to only be in the low double digits. The operating margin for 2025 up to this point is looking to be the low to mid 20s. But the change in case law mentioned earlier is why I expect only a 21% margin in 2025, and I expect this to improve to 22% or perhaps 23% in 2026 and beyond. I have a target PE of 33 for SAP, which gives us an intrinsic value of €255.54, which is around 20% upside over the current share price of €214.40. Thus, I would describe SAP as a moderate buy. Thank you for listening.